Hey, Jim Trader, this is Trevor. Thought I'd answer questions in video. It's a little bit easier to do than typing it. Everything I've learned about how to trade options, I pretty much learned from John Carter. Most of what I'm going to tell you, you can find out pretty easily from his free videos. He talks about it. The way I structure a trade is I buy some in the monies and some out of the monies. The in the monies are delta 70s, which is usually about two strikes in the money. And the reason I do that is if the market goes up slightly, you'll at least make some money. Like, in other words, if I went long here and this is about as far as it went. If I had delta 20s, I may break even with a theta decay. As you do mention that you know that you understand some of how premiums work, which is basically time premium. It kind of sucks out of your position. So if I say went long here, delta 70s and delta 20s, I may make money on my 70s and my 20s may lose money. So 70s kind of protect you from that. However, let's say you like going long right in here and you get delta 70s and delta 20s. Well, your delta 20s, you're going to make 3 to 4 times the amount of money you would on your 70s if it really takes off. So it's almost kind of like gives you an extra boost. So when you're right, you're making really good returns. And I'm noticing now doing this structure that with the delta 20, sometimes if I'm risking a buck on a really good trade, I'm making 10 or more bucks. So it's almost exponential in how the values of those delta 20s move up because they eventually become delta 70s if it goes your way. So I'm pretty much structuring it that way. As far as like, how far out I do it, you definitely want to give yourself the gift of time is what John talks about. So that's kind of tricky. You have to look at the time frame you're trading it. Like, for instance, here was a spring on the, let's do stock. Priceline. That was a good one. And Priceline had a beautiful spring. I actually got in it, got spooked at a lot of other positions. I'm kind of learning to keep my positions a little bit, not too many positions at once. But here, beautiful. Look at the spring. I mean, that's about as textbook of a spring as you can get. Now, basing it on the daily chart, if you have a squeeze, the great thing about the squeeze is that generally they last 6 to 8 bars. So you know it's going to last. If you have a daily squeeze, you know it's going to last you 6 to 8 bars. So you can maybe go out 20 days on something like that, or maybe 30 if you want to be safe. If it's a weekly chart and you've got a weekly squeeze in play here, you know you need to go 6 to 8 weeks out. So then maybe you want to buy options that go out 90 days. That's one way you can gauge it. Other way is if I'm trading a daily setup, I'm generally buying ones that expire 30 days out. My rule of thumb, generally. And if I'm buying a setup on a weekly weekly chart, I'm probably going 90 days out. If it is a 60-minute chart, I may only go 10 days out. Because if you go too far out, you don't really get a great move. Now, I'm not doing a lot of hourly charts, but for instance, here, here's an example. We have an up thrust, a little bit of change of behavior here. Well, no real change of behavior, but yeah, you're taking a squeeze here. It's lasted maybe a day or two. So you want to only go out maybe, 12 days. You can even buy weekly calls if you want to. Also, another idea that I learned from John is he'll also sell premium. So he'll construct a trade. He'll buy delta 70s, delta 20s, and then he will sell an at the money put credit spread. And the idea is if it goes sideways, he makes max profit on his put credit spread. He may make lose money on the other two, but all in all, he probably only risked a third of his total risk on a trade most of the time. So in other words, let's say you want to risk, $3,000 on a trade. He may do an at the money where max risk is 1,000, but he's risking 1,000 to make 1,000. Then he'll do delta 20s and then delta 70s, and he may only buy $1,000 of each of those. That way, you keep your risk minimized if it goes sideways. But I don't do that often. I'm generally just going long calls for puts. If you guys are curious my view of the stock market, I was a little, I wasn't completely shocked by today's movement. We are sitting on top of support right now, so I expect a bounce tomorrow. But if we can't manage to move above this bar here, we have ease of downward movement. Um, I'm anticipating we'll probably come through this level, and next area of support is down here at 1725. Now we have a lot of geopolitical news going on now with Putin, threatening World War, another World War. Also, too, you look at confirming markets. Gold's rallying; it's been rallying. You look at Japanese yen. This is generally a market that goes counter the stock market, and we had a strong move today. Given that we're going into a weekend as well, I have a feeling bonds could probably even move higher, which it looks like they're about to now, pre-market. So there are a lot of fundamental as well as technical reasons to think that the stock market is probably getting ready to top here. We also have shortening of the thrust on the daily chart. Let me pull that up. Daily. Yeah, I mean, definitely shortening of the thrusts here. Violated a trend channel. Well, no major supply. I mean, we did have some supply here. This is the most supply we've had since the rally. So, and we did have a lot of effort here with very little result, and we're violating a trend channel. I think this top's going to take a little bit longer to build. I mean, we could just keep going down tomorrow, but I have a feeling this topping action is going to take another week or so before we really get a big move to the downside. I think it's possible we take out this low. If this is indeed a top of some nature, I think we're going to take that out. Um, Part of it's just gut feel more than anything. But, we do have divergences on the AO telling us we're probably completing a 5-wave sequence of some degree here, and we'll probably get an ABC correction. I still think we're bullish for the year. We'll probably continue to move higher overall, but we're definitely ready for a pullback. And I don't think it'll go down to 1304, but it's definitely possible. 1430 is probably more likely. Um, and we may only go down to 1661. I'm not going to completely discount this market, but I do think we're due for a pullback. Anyways, hopefully that answers your question. And I'll try to post some stocks I'm looking at. I got out of a lot of stuff today. Um, I was in, were fairly disappointing. I think it was, I'm still in, let's see here. Oh, yeah. FSUN. This is the one I was bragging about in my last video. That's fun. I did take about half of my position off here. I had held on to my Delta 20s. I bought it way down here on the spring, so I have a pretty good price on it. I still have a decent profit on the trade. We are sitting on top of support. This looks like a jump across the creek. So I'm not completely convinced it's going down yet, so I'm still holding that. I got out of ABFS. Looks like we were kind of up thrusting here a little bit. Decided to take my profit. I started buying down here, and I bought some here, flatted this position. I covered some of my trade up here, luckily, and closed the last part there. I still have a little bit. I've got my longer term options on that one. Still in PANW. Bought that right in here. We broke above this high, pulled back, tested it, got long pretty much the day before the rally. That was a pretty lucky trade. And TSL was one that was kind of disappointing. That was one. I was in. Thought we were going to hold the support here today. Once we took out this bullish bar, that was pretty negative to me. I mean, it could turn around from here, but really, it should have held the support. And after yesterday's action, it really should have rallied today. I know the market was kind of dragging it down, but I had a very good profit in this trade. I didn't even, I should have taken some profits. I was planning to, then we gapped down, traded down. I'm like, well, I'll hold it. on top of support, kept going down. I ended up losing about my max risk on this trade, which is kind of disappointment. Should have at least broken even. If I took profits here, I probably would have broken even on the trade. So it's importance of taking profits. So that's where I'm at now. I'm long gold. I think gold was very bullish here. Looked like absorption of this level here, and we broke above it a few days ago. Been long gold. I've been long gold since here. We had a change of behavior, a pullback. It was a 310 oscillator buy set up and a squeeze. So I bought some here and added on this breakout. I covered my delta 70s here, so my delta 20s. GDX was one I jumped on board yesterday, right in about the middle of the range yesterday. Decided to hop on board. It was a 310 oscillator setup as well. Broke above support here. Looked like we're absorbing. We kept making higher lows and was anticipating we break out above this high. SLW, Silver Wheaton, is a gold mining stock as well. I actually added on to it today when we broke above this high. Bought some yesterday. It was also in a squeeze, 310 oscillator buy above this support here. Check out the weekly. As you can see, I think this is an ABC correction, so I think this is going to be a C wave to the upside. Here you have trend channel that was violated, change of behavior. We pulled back, tested this low, and started turning up. So, and lots of demand started coming in here. Greatest demand since this down move began. I did not get on board here. I wish I did. When you see this kind of demand coming in after and a violation of a downtrend channel, that just screams change of behavior, and you can go to a faster time frame and look for buy signals. And there was a squeeze here, which I'm starting to use the squeeze for an entry signal. I'll use Wyckoff to determine the background. Here, look at this, perfect support here, 310 oscillator set up. The squeeze basically tells me when a market's quiet and getting ready to explode, and it's always better to buy options during a squeeze because of premiums are cheap, so you can buy calls at a much cheaper price than you would up here. And that's another reason why I bought them here. We've been quiet for a couple weeks, and so I knew they'd be fairly inexpensive. And as they move up, implied volatility would probably increase. So this is kind of a little another thing, a nugget I learned from John Carter, and how I'm using options and using some of his indicators in conjunction with mine. I kind of find that if I simplify my entries and how I get into them, and then I can be as complex as I want on my overall Wyckoff analysis. One thing I always kind of felt was lacking in Wyckoff, other than a spring and an up thrust, was when to get into a position. I could never figure out the best time to do it unless it was a spring or an up thrust. And I find the squeeze and the way John teaches how to use a squeeze and breakouts at certain levels is a perfect way of doing it. Gary he uses a 310 oscillator, which is great, but I kind of prefer the squeeze personally for myself and using it for timing trades. So anyways, that's it. So I'm long gold, a few stocks. I might be ditching them tomorrow. I kind of think the stock market could definitely sell off with geopolitical news going on here, and I'm looking to go flat. Most of my stocks stay long gold. Maybe bonds look strong. I was long bonds. Back here, we didn't quite have a spring, but we were consolidating here. So, and we have a 310 oscillator buy. I would like to see it consolidate a little bit before I start buying it, but that and the yen looks like it could be going higher as well. Anyways, longer video than I thought it would be, but hopefully you find that insightful, and I'll try to keep you guys posted on other ideas, trading ideas I get.